Thanks for having me.
Wicked. Yeah, thanks for being here, Jackson. Yeah. All right. Okay, with Chardan here, what made Hyperliquid financeable for you guys and in public markets in like way that with crypto assets you can't really do?
Yeah, so it's a good question, and you think back to where both the DeFi markets and traditional markets were in the summer of 2025, kind of before a massive run up in convergence, where digital asset treasuries were raising a lot of money at the same time. And you think about what a lot of those companies were doing large pipes to raise capital for going out there and purchasing tokens, a wide swath of different tokens. Some of them with varying utility, some of them with ecosystems like Solana that have lots of developers on top of them in Ethereum. Some just buying Bitcoin and holding on the balance sheet. Hyperliquid is different from a lot of the tokens out there, as many of the audience know, in the sense that there's a real business and a real exchange underlying the operation of the token, a flywheel model that generates revenue that the lab uses to repurchase shares on a deflationary tokens on a deflationary basis. So from a Wall Street perspective and a traditional investment banking perspective, where you have traditional underwritings that are focused on listed vehicles and public and private M&A and things like that, it's a lot easier to tell the story to institutional investors that are interested in investing in an ecosystem like Hyperliquid that already understand what trading and liquidity means. And so our job was largely done for us in the sense that the Hyperliquid team had done such a good job in setting up their ecosystem and supporting their developers. And by the time the digital asset trade heated up last year, Hyperliquid was gaining recognition. They had not gotten to the point where they were tokenizing oil and commodities yet, which was revolutionary towards the beginning of this year. But there was a lot of credible momentum that we could point towards. So it's an exciting ecosystem.
Yeah, incredible. With this crypto salon that you guys held earlier back in May, I think it was, that was there to kind of raise awareness around Hyperliquid. What did you guys learn from that, or was there any takeaways from that event?
Yeah, it's another great question, and for the audience's awareness, we held Chardan Capital Markets. We held a Hyperliquid salon May 27th, I believe, which was only about 4 days after the HIP-4 protocol was announced. So there was a lot of excitement already, but then a couple of days before we had the event, and the labs team came, and Trade XYZ and a couple other builders on top of the network were present. We had that kind of big announcement that added a tailwind to the event. And what we saw pretty clearly was that people were understanding what, from an institutional perspective, people understood what Hyperliquid does in terms of 24/7 trading and tokenization of commodities and things like that. And there was a lot of excitement around that. But what we came away with was there's a clear understanding from the traditional exchanges, whether they're options exchanges or TradFi exchanges, that the world is moving towards 24/5, 24/7 types of trading. CBOE, Nasdaq recently launched a tokenization program that allows them to tokenize ordinary shares. And ICE, the parent company of NYSE, is actively making acquisitions in this space. So we clearly saw from that salon that TradFi is recognizing what's happening here, and they're having a lot of conversations with the three-letter, regulatory bodies that are out there about this. But they all seem to recognize that this perpetual trading is coming, that the roll forward, which was a huge part of their businesses in the past, trades being rolled forward quarterly, that business is in jeopardy, and that they need to collapse and offer 24/7 trading for a lot of their products, that they're going to risk falling behind.
Amazing how something like that is what's able to push them in a different direction, or at least hey, we need to catch up. Right? Pretty cool to hear that. So when you guys are raising capital for like an ecosystem like Hyperliquid, what do institutional investors care about compared to crypto native people, or what does crypto people overlook as compared?
Yeah, that's another great question. The crypto native crowd tends to have different priorities. The overlap of both of them is they care about liquidity and volume. The traditional investor side cares about governance and cares about structure and cares about market communication. And so things like investor relations that are done in traditional kinds of markets are also important in crypto. And the team at Hyperliquid does an excellent job of shipping and then explaining, right? They drop something like HIP-4 and then they explain to the market what it is on a proactive basis, so that participants understand what they're working with. And from an institutional adoption perspective, you need that visibility, or you can't bring folks on chain. You can't bring folks to trade and participate in the ecosystem without that kind of clarity. And they want to understand what the lab's kind of process is and what different types of builders are doing on top of the network to help drive those flows.
So as far as, I guess, a hype treasury company, what must they do kind of beyond just like holding hype on the balance sheet, just to make that kind of have a premium to, guess net asset value?
Yeah, so this morning in the other room in the main panel section, you guys had 21 shares up there, or our friends at Bitwise and Grayscale, and I believe representatives from kind of all three ETF businesses were here, and they'd be the first to tell you, as they did on stage, we can offer you that beta all day. You don't need to invest in a treasury company to get exposure. And so the question is pertinent because just sitting on top of a hoard of a treasury, similar to what Saylor's been doing for years, can lead to a significant premium and MNAV. But over time, that premium can erode if you're not doing accretive activities. Think like M&A. Think issuing stock when you're trading at a discount to MNAV. I believe David Seamus from PURR, from Hyperliquid Strategies, mentioned this morning they experienced a wild swing in the last 60 days, 45 days, from a 1.3 times MNAV to a 0.959, 0.9 MNAV. And that's on top of an already liquid underlying token. And so companies like David's that are actively managing their positions have the flexibility and a lot of opportunity out there to go do structured strategies with their holdings and generate yield from them, whether that's in staking or structured strategies on top of that. So that's kind of one area. They've got M&A, and then they've got participation within the protocol. So whether that's working with the builders or that's working directly with different folks that are participating in the ecosystem, or doing more trading themselves.
Got it. Cool. If another team was to try and copy everything that Hyperliquid has done, what would be the hardest for them to replicate, I guess, in capital markets? Yeah,
so you think about some of the names that we just spoke about while we were on stage, the Nasdaq, the NYSE, and the CBOE, to get traditional exchanges that are very good at what they do on a cost basis to recognize that the model is changing. That takes a serious amount of credibility. And so, could another team come along? And I've heard multiple pitches to this effect that people want to be the American-based Hyperliquid ecosystem that's got the same flywheel. You don't have the multi-year credibility that the Hyperliquid ecosystem has. You would be behind from a technology stack perspective. Anyone can kind of operate a DEX that's out there clipping fees. But not anyone can assemble the rapid credibility that Hyperliquid has, and certainly they're not going to be the first people to tokenize things like oil on the weekends and provide a venue for price discovery where there was previously no discovery. And so they're pioneers from that perspective, and in that sense, it'll be difficult to recreate what they did.
Well, fantastic. Thank you so much for being on here today and getting some perspective from more of the institutional side.
Thank you for hosting this event too, Tangle.
Hyperliquid.
Hyperliquid.